Hey YouTube, so today I want to share with you how I look for value when I look for stocks to invest in. Um, I'm really I don't like to overpay for companies, and sometimes that hurts because um, there's people that follow trends, and there's sometimes where you know I won't invest in a company that's starting to skyrocket because it's scary to me, right? um, but that will make me miss out on certain things, and I'm trying to break that a little bit. And I got an example here that might I got a couple examples here of things that have skyrocketed that might be good, but what I want to do here is show you how I look at a stock really quick and trying to decide whether it's worthy of further consideration, right? So first up, I got Mo, ticker symbol MO, and that's Altria. And the very first thing I look at on any stock is I look at their trailing PE, price to earnings, and the trailing PE, which means the previous 12 months. I think they got 12 months here. Is 54.61. But the forward PE, I think, is a better number because what that does is it looks at what's projected earnings for next year. So projecting the future. So right now, Altria has a forward PE of 11.44. Now, I kind of subscribe to, I want to subscribe to Fast Graphs, which is Chuck Carnival's analyzer tool. And he has this thing about PEs of 15 or less, 15 being fair valued, under 15 being good value, over 15 being possibly overvalued, but I mean, there's other criteria there, depending on what sectors it in. So what I do is I look for forward PE, which is low, 11.44. So I'd call this a buy. And then I'd come up here to analysis, and I'll scroll straight on down all the way to the bottom, and I'll look at growth estimates, right? And I'll look at next year. So we got a 5.5% growth projected for next year. And with that 5.5% plus the dividend, you could reasonably estimate that you're going to get about 10-11% return. Of course, that's an estimate, right? So that's Mo. I am long, ticker symbol MO, and it's been on a tear lately, and this is one of the stocks that I would consider buying on the way up. I've got an average cost on this in the mid 40s, I think, and I got a starting yield on this in the sevens, 7 point something. So I think it's still a good buy. Next up is one I talked about before, and that's Bristol Myers. I bought this in the mid 50s, I believe, and this thing's on a tear as well. If you look at, again, trailing PE of 18, forward PE of 10. And this is another one. PEG ratio under 1 is good. That's the price to earnings and growth. So under 1 is always good. And we'll look at this one. Could be something huge here. And this is another one I am considering paying up for. And if you look at growth estimates next year, 39.5%. So I think this thing has a good runway, and it pays you almost a 3% dividend. So Bristol Myers might be one that you want to research a little bit more into. This next one, I actually, I've been asking my wife for companies that she thinks, because she doesn't research the stock market. So I just, want to know what company she thought of and she thought that might be a good investment. And this is something I never looked at. So this is literally, I'm looking at this live right now. And she told me Cheesecake Factory. And I got to looking and I'm like, this is going to, I did about 10 minutes of research on this while we were at the doctor's appointment. And this looks like I need to look a little bit more into it because we got a trailing PE of 18, forward of 14. I believe it pays around a 3% dividend. You have a price to sales of 74 cents. And they just acquired a company. I've been reading, they've been opening up restaurants left and right across the country, and they acquired a company. So this is something, and then you go to the analysis, and I scroll right down to the growth, and we got next year growth of 5.7%. It's got a dividend yield of around 3% as well, so this might be something to look into. Now the next one that got on my radar, because you guys know I like my high yield, so I always look at high yield companies and I try to figure out why they're high yield, right? And I'm going to give you a couple of examples here. First one is Occidental Petroleum, ticker symbol OXY. And it has a trailing PE of 28, but a forward PE of 36, almost 37. So what it's saying is that you're paying more for next year's earnings than you did last year's earnings. That means that their earnings are probably going to drop, right? Since you're paying more, it takes more dollars invested per dollar of earnings. Does that make sense? I don't think I'm saying that right, but I think I'm close. So this pays about a 9% dividend, but if you go over to the analysis, they did some funny thing with I think Anadarko. They had a bid war with Chevron. They lost out, or they won, and they overpaid or something. I did like 10 minutes of research on this, and you look at the next year's growth estimate, negative 42%. So for this one, there's a reason why they had a high of $80 and a current price of 38. There's a reason for that drop, and this is something that I probably wouldn't buy at the moment. Next one is an oddball, and a lot of people overlook this company. I've been in and out of this company for the past year. I use it as a trade. I don't swing for the fences. I'll make 40 bucks here, 40 bucks there on this thing, because this usually trades between the $2 and $3 range. That's Office Depot, and it's a very cheap company. And if you look at trailing PE of 48, forward PE of 6.7, price to sales of 13 cents, right? So you look at the analysis and you go to the growth part, right? And that growth part, to me, next year, 2.6%. So you're not going to get, it's a slow company. And it's probably not going to break out. But you get pockets of opportunities with this company. Like, this fell off my radar for some reason this year, and this really could have made somebody some money this year. And I was looking for news of, why this stock fell so hard earlier this year, back in August. I don't know why. I mean, look at it, was at $1.30. You could have bought this at $1.30. You would have doubled your money in, what is that, 4 months? You would have had almost an 8%. It was trading at almost 8% yield. and you could have doubled your money. I got in this, but I got in it too late by the time I saw it, and I rode this from, I think it was 220 to 240 or 260 or something like that. So I made $40 off of a trade, but this can give you an opportunity every once in a while to make some money. So that's what I look at. I look at forward PEs. I look at growth, and if those two things are there, then I start reading analysis and articles and 10Ks, or I try to read both sides. The bull case. I try to find a bull case article and a bear case article, and I try to see which one I believe, and that's how it's done for me anyway. Anyhow, if you have any other questions, I know this went on a little longer than I planned, but if you have any questions, leave them down below. Thanks for subscribing. We'll talk to you later. Thanks. Bye-bye.